Welcome to Simple Investing Secrets. In today's video, we'll review 3 top tech stocks that could make you rich in retirement. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. Tech stocks had as difficult a year as any sector in 2022, with the Nasdaq 100 Tech Index falling more than 39% over the past year. It's challenging to find tech stocks, which are well known for their growth, that hasn't suffered from declining share prices. Health Catalyst, Oracle, and Microsoft are all likely to bounce back this year because their financials never really faltered, even though the market was negative about the sector. All 3 companies are making more money because cloud computing is growing and their margins are higher than average. Savvy investors may want to buy these 3 now while their valuations are relatively low because they all look like great long-term investments. According to a Markets and Markets report, the cloud computing market was worth $545.8 billion in 2022 and is expected to grow at an annual rate of 17.9% over the next 5 years, reaching $1.2 trillion by 2027. With that said, let's look at our top 3 tech stocks that could make you rich in your retirement. Number 3. Health Catalyst, ticker, HCAT. Health Catalyst Incorporated provides data and analytics technology and services to healthcare organizations. Its products include an analytics platform, financial and accountable care, benchmarking and comparative analytics, care management and population health, clinical analytics, operations and performance management, patient safety and services. Health Catalyst focuses on delivering data and analytics technology to healthcare organizations. Its platform is in the cloud, which makes it easy for healthcare organizations to store and organize patient records and clinical data. Even though the company's stock price dropped by more than 73% in the past year, its revenue kept going up. It has increased revenue by 141% over the past 5 years. Through the first 9 months of 2022, Health Catalyst reported revenue of $207 million, up 16.8% year over year. More importantly, the company is trimming its losses. Through 9 months, it had a net loss of $101.6 million, a 2.5% improvement over the same period last year, and an earnings per share loss of $1.97 compared to an EPS loss of $2.27 in the first 9 months of 2021. The price decline makes this growth stock a better deal, as its price to sales and price to book ratios have fallen to more realistic numbers. Number 2. Oracle, ticker, ORCL. Oracle, which has branched out from a computer hardware company to one that provides cloud-based services, saw its shares fall a little over 6% over the past year, which isn't bad considering what happened to other tech stocks. Oracle's recent changes and acquisitions seem to be paying off, and the company's revenue is on track to go up for the 3rd year in a row. It trades at 25 times earnings. Through the first 6 months of the company's 2023 fiscal results, it reported revenue of $23.7 billion, up 18% year over year, with net income of $3.3 billion, up 172% over the same period in fiscal 2022. Oracle also reported a 6-month EPS of $1.20, compared to an EPS of 43 cents in the same prior year period. Oracle has been able to absorb its $28 billion purchase of healthcare IT company Cerner in June, and that deal should continue to drive revenue. Company Chairman and Chief Technology Officer Larry Ellison said Oracle is hoping its Cerner division can improve the automation of clinical trials to save pharmaceutical companies money and shorten the time it takes to bring new drugs to market, saving lives in the process. In the short term, the company may take a hit to its profitability from its Cerner deal. On the company's second quarter earnings call, Oracle CEO Safra Catz said the company is looking for economies of scale and ways to bring Cerner's profitability up to Oracle's level, but next fiscal year could be a trough year for margins until that happens. Oracle also offers a quarterly dividend, which it has increased for 12 consecutive years. The most recent bump was 33% to 32 cents per share, which equals a yield of around 1.6%. Its cash dividend payout ratio is only 40.9%, so there's room for increased dividends. Number 1. Microsoft, ticker, MSFT. Microsoft is at the top of not just one of the most important tech trends in the world right now, but 2 of them: artificial intelligence, AI, and cloud computing. Both of these should help fuel the tech titans' growth in the coming years. Late in January, Microsoft made headlines when it said it would invest billions of dollars in OpenAI, the well-known research lab that made the very popular AI-powered app ChatGPT. Microsoft didn't wait long to add OpenAI's technology to its Microsoft Teams communication platform, and it's said to be working on giving its office productivity software features like ChatGPT. These AI improvements should make these tools more useful for users, allowing Microsoft to raise prices and make more money in the long run. Microsoft could have an even more intriguing growth opportunity in the internet search arena. CEO Satya Nadella wants to use AI to take share from search engine industry leader Alphabet in a market that's valued at more than $200 billion, according to analysts at investment bank Jefferies. To do so, Microsoft recently launched an AI-powered version of its Bing search engine that it says can provide more relevant and complete answers than Google currently offers, via a ChatGPT-like conversational experience. Google is working on its own AI features to protect its market share, but ChatGPT's popularity could help Microsoft steal a lot of search users from its competitor. Yet Microsoft's biggest and most exciting growth opportunity likely resides in the cloud. As part of Microsoft's partnership with OpenAI, Azure is now the only cloud computing service that ChatGPT can use. With Microsoft investing heavily in its AI infrastructure, many other companies are likely to follow OpenAI's lead and build their AI apps on Azure's platform. Microsoft is a classic stock for retirement because it is both stable and growing, and it pays a dividend that is higher than average. The company's size and diversification give it an extra edge. Thanks to its more than 28% share drop over the past year, it is also a little more affordable, historically anyway, trading at just over 24 times earnings. Counting a record $198.3 billion in revenue in fiscal 2022, Microsoft has increased annual revenue for 6 straight years while also increasing annual net income and yearly EPS for 4 straight years. This year, Microsoft raised its quarterly dividend by 10% to 68 cents per share. This is the 20th year in a row that Microsoft has raised its dividend. The company's revenue grew 11% year over year to $50.1 billion, but net income was down 14% to $17.6 billion, and EPS declined 13% to $2.35. The company's cloud revenue was the star at $25.7 billion, up 24% over the same period last year, but personal computing decreased slightly to $13 billion because of falling sales for Windows OEM and Xbox content and services. The company has been in transition for a while, but this past quarter showed how much things have changed, with more than 50% of the company's revenue coming for the first time from its cloud segment, including commercial Office 365 subscriptions, Azure, LinkedIn, and Dynamics 365. This year, Microsoft raised its quarterly dividend by 10% to 68 cents per share. This is the 20th year in a row that Microsoft has raised its dividend. The yield on the dividend is around 1.1%, and the cash dividend payout ratio is only 29.3%, so the company can continue to increase it. Like Health Catalyst and Oracle, Microsoft has exposure to the healthcare industry, and this year it updated its Azure Health Data Services and Microsoft Cloud for Healthcare. This concludes our list of the 3 top tech stocks that could make you rich. As always, it is essential to do your due diligence before committing your hard-earned cash to buy stocks or invest in the market. Which of these stocks would you consider adding to your investment portfolio? Let us know in the comments section below. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.